Good morning. Welcome to our annual press conference. When almost on this day, 2 years ago, we went into the first lockdown of the pandemic, well, I believe that no one would have thought that this issue would still be with us 2 years later. And it was unfathomable that most of us that the pandemic would be replaced by an even more profound censure in recent history, namely Russia's attack on Ukraine. Since this conflict is not only moving us on a personal level, but also affects ZF as a company, I would like to begin with an assessment of the situation before taking a look back on 2021. So for more than 3 weeks, all eyes of the world are on Ukraine. We are confronted with the most serious conflict in Europe in recent decades. We're all deeply concerned about the safety of our Ukrainian employees who are working there and at ZF locations in neighboring countries. We were deeply worried about the fate of their family members and relatives. Just like it has been the case during the pandemic, protecting our employees is key on site. What has been setting us apart as ZF is our solidarity in our company, and in this spirit, we offered our support to our employees who are directly affected by the war. So this means, for example, that we will continue to pay their wages if they have to take care of their family members. We will safeguard their jobs, and we will help them and support them when looking for accommodation. With our association ZF Hilft, we are calling for donations. But still, despite the depressing situations, we are being courageous, because if we take a look at what our local teams and ZF around the globe is doing to help the people in need. Our crisis management team is closely monitoring the current developments and is coordinating the support measures. At the same time, they're taking a closer look at the possible consequences of the conflict, because the recent developments in Ukraine is just one impact which we see on global economy, something that has been with us in the past 2 years. What started with the hard lockdown in the first half of 2020 is now continuing in 2021 with the lack of semiconductors and other raw materials. And almost 10 million vehicles could not be built in the previous years, cars, trucks, buses, and we actually have customers for these segments. In addition, we have seen significantly increasing purchasing prices and higher costs for freight and warehousing. Our customers are currently stopping their production due to these component shortages and sanctions. This also affects, of course, our production, which is why we are currently adapting our capacity planning. So we had to deal with 2 crises in a very short period of time, and now the third is following. But at the same time, last year we managed to achieve our strategic milestones and to set and pave the way for the future. So despite the headwind we have seen over the course of the years, we still remained on track. And already at the very beginning of the year, we achieved our goals for the year. So thanks to the commitment to the perseverance and team spirit, our employees made a decisive contribution to be able to meet the challenges of these extraordinary times. So we adapted to the new normal. We became more agile, flexible, and digital. So I would like to extend a big thank you to the overall ZF family. But it was not only about meeting the current challenges of the market. So ZF was more strategically aligned and focused on the future of mobility. At several locations, we concluded target picture agreements, as for example, we did it in July 2020 in the Transformation Collective Agreement. Just 2 weeks ago, we concluded an agreement in Koblenz. In a very successful manner, we launched eAcademy. That's the largest further training initiative in the history of ZF, all around the topic of electromobility. So it's targeted for the employees of the electrified powertrain technology division in order to help them to adapt to the change. And altogether, more than 13,000 employees have already participated in the various learning opportunities offered by the eAcademy. So this offer also includes internal further qualifications for new job profiles, and already the first participants successfully completed this course last year. And other employees will complete the 6-month qualification program during this year, 2022. There was a special focus on the 3 trend-setting core fields: electromobility, autonomous driving, and software development. Because after all, the vehicles of the future will be autonomous. They will be interconnected, electric and software defined. So we expanded our capacities and resources, and we have won substantial new customer orders. They will extend far beyond this decade and display that ZF is at the forefront of future technologies. And last but not least, we used the last year to prepare the launch of our new division, Commercial Vehicle Solutions. So since January 1st, the 2 previous divisions are now combined into one unit. And this means that the integration of WABCO is largely completed. So in total, the developments of the last year brought about the following key figures, financial key figures. So we achieved sales of 38.3 billion euro. And this equals an increase of 17.5% compared to 2020. It could have been more, actually, if we wouldn't have seen and witnessed the supply chain topics which slowed down vehicle production. At the same time, the value of 38.3 billion euro is above the one we have seen in the pre-crisis year 2019, when we achieved sales of 36.5 billion euro. Adjusted EBIT amounted to 1.9 billion euro, and the EBIT margin equaled 5.5%. Investments in property, plant and equipment amounted to 1.6 billion euro. Since we're strategically focusing on future technologies, and despite the high cost discipline, we increased our expenditure and expenses on research and development. So we did not only maintain them, we increased the amount. 3.1 billion euro, equaling 8% of sales. This means that we reach a record level in CF history. This amount also exceeds the previous peak from 2019, when we spent 7.3% of sales, equaling 2.7 billion euro on research and development. This is key to us in order to be able to push the topics of the future. So we were focusing on efficient drives for electric vehicles, our new software architecture at ZF, electronic products, as well as cloud connection and data management. So at the end of 2021, we had about 157,500 employees, which means an increase of 2.6% in comparison to 2020. We have continued to expand and increase our capacities when it comes to research and development in order to be able to create additional capacities in the fields of the future. And now I'd like to hand over to my colleague, Dr. Konstantin Sauer, who will tell you more about the key financial figures.
Thank you very much, Mr. Scheider. Ladies and gentlemen, I'd also like to warmly welcome you to this year's annual press conference. In the following, I will present you the main key figures from the Consolidated Financial Statements 2021. In 2021, ZF achieved sales of approximately 38.3 billion euros. The growth of just under 6 billion euros means an increase of 17.5% compared to the previous year, and is in the forecast that we gave of between 37 and 39 billion euros. In total, we had slightly negative exchange rate effects of almost 200 million euros. Structural effects from M&A activities amounted to 1.3 billion euros, and they result from the successful integration of the WABCO Group that we acquired on the 29th of May 2020. The sales figure is now included in the ZF Group figures for a full 12 months. Adjusted by the above-mentioned exchange rate effects and the structural changes, sales grew organically by around 14%. Comparing this with the growth of the global passenger car production of 3%, ZF achieved a significant outperformance compared to the overall market. However, the 2 halves of the year developed very differently. We had a good start to 2021. and experienced strong growth of 38% in the first half of the year, compared to the weak first half of 2020, which was influenced by the coronavirus pandemic. However, supply bottlenecks with semiconductors led to a strong negative impact in the second half of the year. In the second half of the year, sales were even 2.6% lower in the second half than in the first half of 2021 even. As I just mentioned, due to the shortage of semiconductors, about 10 million fewer vehicles were built, and that had an impact on ZF, which means that we lost an estimated sales of around 2.7 billion euros. Now let's have a look at the distribution of sales by region. The region with the largest ZF share of 45% was Europe again, followed by North America with 27%. ZF sales in Europe and North America were significantly above the prior year's level with 13% and 19% adjusted by currency effects, and they developed better than the overall market. With sales of 9.4 billion, the region of Asia Pacific was 9% above the prior year level. And relating to the other regions, the growth was lower, but that is because China was the only region in 2020 that had growth. So they were starting with a higher starting point. Sales in South America amounted to approximately 1 billion euro with organic growth of 46%. Africa, with sales of 373 million euros, remains the smallest region, showing growth of 10%. Finally, in 2021, we have to say that we clearly outperformed the overall market in all relevant regions. After the details of the sales development, let's take a look at the expenses for R&D and investments in PP&E. We increased R&D expenditure by 22% to almost 3.1 billion euros. That corresponds to 8% of sales. That's an all-time high. With a significant increase of more than €500 million, we show that we're clearly committed to our next generation mobility corporate strategy, and that we're also taking into account the faster transformation in the automotive industry. We mainly focused, as Mr. Scheider said, on technologies in the fields of electric mobility, autonomous driving, and active and passive safety. We also increased our investments in property, plant and equipment by approximately 11% to 1.6 billion euros. Due to the continuing volatility in the market, we are very careful when it comes to releasing investments. We have an increase, but the investment ratio of 4.2% of sales is still slightly below that of the previous year of 4.4%. Now let's have a look at the development of results. Compared to the previous year, we were able to significantly increase our adjusted EBIT to 1.9 billion euros. We achieved our earnings target, but last year gave us a lot of operational challenges. On the one hand, the year was characterized by unstable sales developments and also caused by the shortage of semiconductors. This was a high challenge for us regarding strict cost management, and on the other hand, the flexibility of our cost structures was in demand. In addition, we had to deal with massive cost increases in the area of material prices, freight and energy prices in the second half of the year. Despite all these challenges, we were able to meet our earnings expectations. With an EBIT margin of 5%, we are exactly within the target range of our forecast that we had stated in a range between 4.5 to 5.5%. Adjusted for extraordinary effects and one-time effects, and after deducting the net tax result, the net profit after tax amounts to 783 million euros. Compared to the previous year, this represents a significant improvement of around 1.5 billion euros. Let's have a look at our profits in 2021 and how they translated into cash flow. In 2021, the increase in earnings was the main driver for generating free cash flow. And adjusted for M&A activities, our free cash flow was around 991 million euros. That is roughly the level of the previous year. Here we are also within the forecast that we had made of a range of between 800 million and 1.2 billion euros. But at this point we have to say that due to the semiconductor crisis, we deliberately accepted higher inventories in order to guarantee supply reliability. All in all, against the backdrop of this extraordinary buildup of stocks, we can be very satisfied with the cash generation. Now let's have a look at our gross and net debt. At the end of 2021, gross debt was 12.5 billion euros, net debt was 10.1 billion euros. We were able to further reduce our net debt by approximately 750 million euros. In addition to improving the quality of results and debt relief, we also actively managed our maturity profile over the last 12 months. In total, we repaid an amount of 1.9 billion euros prematurely. And we're the first automotive supplier in Germany to issue a green bond in April 2021 with a nominal volume of 500 million euros. And in November 2021, we had another transaction also over 500 million euros. In the future, we will continue to support our sustainability strategy with sustainable financing and further increase this share. Let's have a look at our balance sheet structure now. First of all, organic growth and a positive profit contribution mean that we increased our balance sheet by 1.6 billion euros to 38.4 billion euros. Altogether, we can say that the balance sheet structure has improved. I'd like to point out here that we have reduced financial liabilities, in particular provisions for pensions, and we have a significant increase in equity by more than 2.5 billion euros. This means that we have an equity ratio of 19% approximately. Thank you very much for your attention. I'd like to hand back to Mr. Scheider now.
Now let's take a look at the forecast for the current year and the future developments of ZF. So this depiction is most probably something you're familiar with because it has been with us at the annual press conference for a couple of years. But what is changing from year to year and what is moving more to the left-hand side, that is to the present, is the point where the lines cross, where vehicles with ICE and those with an electric drive will have the same market share on a global scale. We at ZF assume that this will be the case most probably in 2028. Because the consumer's desire to contribute to decarbonization, it is growing, and many countries are strongly pushing electromobility. With its scenario planning, ZF has adapted to this in good time, and thanks to targeted investments, has created good circumstances and prerequisites to shape the change towards e-mobility to the benefit of ZF. This anticipation pays off today because ZF supplies its customers worldwide as a full-range supplier with a wide range of electric drives for all vehicle types, from subcompact to heavy trucks to buses, for all drive systems, from plug-in hybrid to all-electric mobility. The rapid development of the first 800-volt power electronics with silicon carbide semiconductors, which we need for shorter charging times, a better power demand, and higher ranges, demonstrates the high speed that we have at ZF in order to develop these future technologies. We're benefiting, of course, from our cooperation with the semiconductor specialist Wolfspeed. So both partners in this cooperation benefit from their industry and technological know-how. The power electronics of electric vehicles are becoming increasingly important. It is also a crucial part of the added value of an electric vehicle. So we intend to take a prominent and leading role in this sector. Thanks to the latest methods, we have developed an entire modular kit for power electronics that meets the most diverse demands of our customers. Last year, as well as this year, we can confirm our approach thanks to the orders we have won. Within a short period of time, we're expecting a significant ramp up in the production of our power electronics modular kit. Up until 2030, we will have many units, millions of units, which equal a high market share for ZF. See, think, act. Our motto is more relevant than ever. C stands for the sensors. Think for high-performance computers in the vehicle and for cloud implementation. And act for those components that are moving the vehicle in all dimensions. Software is connecting it all and creates new features and functionalities for the mobility of tomorrow. In the future, there will be more and more of our added value in this respect, and that is the reason why we're making investments, for example, in employees and corporations, but at the same time, we're changing the way we work and cooperate. As the vehicle is software-defined, ZF is changing to a larger extent. It is changing ZF more than electromobility. So we need to adapt all of our products to be connected and to be equipped with sensors. So software will be continuously developed. It's a continuous process and offers new earnings models in the life cycle of a vehicle with additional features, new features, but also by assessing and evaluating data. So there will be first volume production starts for software products in the next year, during the next year at 2 Asian vehicle manufacturers. The software package Cubics coordinates the chassis components that we at ZF combine in the area of vehicle motion control. And, which fits well with it, is that we have presented the VMD controller, a new central computer for the chassis systems. This was presented at CES. So software and high-performance computers perfectly match each other, and the actuators can optimally provide for vehicle dynamics in the chassis of the future. So the software-defined vehicle also brings about a tremendous change, and is changing ZF at full swing and changes the way we work and cooperate. In 2021, at the beginning of 2021, we founded the Software Center. And thanks to the cooperations which we have, for example, with the software development partner KPIT Technologies and Apex AI, as well as Microsoft and another 10,000 software specialists at ZF, we are really well equipped and positioned in order to shape this change to the benefit of our company. And now I would like to take a closer look at the ZF Cloud, because it is key for our path towards becoming a software and cloud-based company. The ZF Cloud is an all-encompassing data integration platform in order to be able to digitalize all our industrial and operational production and business processes centrally from the cloud platform Microsoft Azure. Thus, ZF is developing to become a cloud-based mobility service provider. But what does it mean? On the one hand, the ZF Cloud enables a seamless data transfer to the digital platforms of our research and development section. On the other hand, there are specific applications in the vehicle. The cloud, for example, helps to process data which are passed on from the height sensor in the chassis. And this new ZF product, which you can see here in this diagram, can continuously send data on the road conditions to the cloud, and thanks to an integrated algorithm, can effectively protect the driver and other road users. How? By, for example, sending data on dangerous potholes to the road building authorities, for example, so they can remedy the damage. Car rental companies, insurance companies can also improve their business models with these data. ZF is following a consistent approach towards the cloud because we're working with one cloud and we will be storing all data at one location. The opportunities it entails when it comes to data assessment are very interesting and will also bring about more efficiency in processes, advantages in terms of development speed, time to market, as well as the quality of our products. Another elementary key milestone when it comes to our next generation mobility corporate strategy was the integration of WABCO, a commercial vehicle specialist. After the acquisition, WABCO was transferred to the group as an independent division, Commercial Vehicle Control Systems, and in parallel we also had the ZF division, Commercial Vehicle Technology. And both were joined forces as of January 1st to the Commercial Vehicle Solution Division, employing 25,000 people. Last year, they generated sales of 7 billion euros, equaling to 20% of our group sales. With the new positioning of the Commercial Vehicle Solutions Division, ZF is becoming a global champion for commercial vehicle solutions, both in a technological and economical sense. The new division, Commercial Vehicle Solutions, is pooling the technological expertise of ZF as well as its market potential. So the division benefits from the technologies which we also develop in the past car sector and has the necessary size and resources to further promote ZF's consistent growth strategy in the commercial vehicle sector on a global scale. Which products and solutions will be presented to you is something which you can see at the IAA Transportation in Hanover in September, and I would like to invite you all to join us there. With this step, we will also become more independent from the past car business in a sector where we have longer term planning cycles and also a decreasing degree of volatility. In comparison to 2019, the share of commercial vehicle and industrial technology in group sales increased by 35%. And in addition to that, we acquired additional business by combining our technologies. Thus, the acquisition also contributes to achieving our financial target.
It is our social responsibility and also a strategic corporate target to act sustainably. We are continuously working on our target of becoming climate neutral by 2040. The year 2030 is an important milestone here. We have numerous sustainability measures that should have taken effect by then, and one of these is to supply our locations with 100% green electricity. On this path, we are making good progress, and we made good progress in 2021 when we concluded major supply contracts with wind and solar energy producers. This enables us to supply the ZF plants in Germany with up to 210 gigawatt hours of green electricity between 2022 and 2025. And this means that we can reduce our CO2 emissions by 80,000 tons per year alone by this measure. It is important for us to rely on specific measures in order to have an immediate effect and contribution for climate protection. In addition, as Dr. Sauer has already mentioned, we were the first automotive supplier in Germany to place 2 green bonds with a total amount of 1 billion euros. The proceeds from these bonds will go into wind power and also into electric mobility. With these green bonds, we will also be able to align our financing with our sustainability targets. However, our sustainability ambitions are only as strong as the commitment of our employees to live up to these targets and to put them into practice. Here we are experiencing a very strong commitment and a great willingness to go this path together. In order to anchor this even more broadly in the company, we launched the Acting Now initiative, where we are bundling our sustainability projects. This includes, for example, that we've extended our internal ideas contest to include the sustainability category. And here we have some highly interesting initiatives and projects from our locations with completely different approaches. In Schweinfurt, for example, we have a ZF car park that is now the home to one of the largest photovoltaics systems in Germany. In Shirley in Great Britain, the Development Center has construction planners and the local ZF team who are focusing on energy efficiency for a new building. And the result is a building that is rated with the efficiency class A+, and that will be fully climate neutral this year already. This real estate project is an ideal blueprint for us and for new buildings at other locations worldwide. So we're excited to find out what other sustainability ideas we will get from our employees in the next few years and which we can award then. With this, I've given you an overview of the key topics for this year, and I would like to conclude this press conference with the forecast for 2022. After the positive market development in 2021, the economic environment is remaining highly challenging and volatile. And even though the supply of semiconductors is expected to improve in the second half of the year, the continuing COVID-19 pandemic and general supply bottlenecks, as well as increasing inflation, are making the forecast difficult. This is reinforced by the war in Ukraine and its worldwide negative effects. The interruption of supply chains of the automotive and commercial vehicle manufacturers has already led to production downtimes. And although we at ZF are currently hardly affected by these war-related production stops, the downtimes at our customers are leading to a stop in call-offs. The extent to which a possible further escalation of this war will have an impact on the global economy and industry growth in the business year 2022 is something we cannot predict right now. And that's why we are explicitly putting our forecast under reservations. ZF is expecting moderate growth in 2022 in group sales of more than, for the first time, 40 billion euros. And this sales growth is expected to result in an adjusted EBIT margin of between 4.5 and 5.5%. The adjusted free cash flow is expected to be between 1 billion and 1.5 billion euros. At the end of my presentation, I would like to give one personal statement that affects me. At the end of my presentation, I would like to give you one statement that is of personal nature. I've been in the automotive industry for 35 years now, and I will soon turn 60. And I decided to embark on new paths. At the supervisory board meeting yesterday, I informed the supervisory board that I will not extend my contract. I will still remain with the company for a few months, 10 months approximately, and I will actively contribute with ZF to overcome this current crisis, just as we mastered the last two crises. And after that, I will seek a new challenge that is not in the automotive industry.